Hey guys, so in this video I'm going to be going over these stocks to buy in February of 2018. And if you're new to my channel, I make videos on the stock market and investing, so if you're interested in that, consider subscribing and let's get right to the video. So the first stock that I think is attractive to buy in February of 2018 is Newell Brands. The symbol for them is NWL, and they're a $15.5 billion company that owns quite a few very well recognizable brands. They own Rubbermaid, Coleman, Oster, Crock-Pot, Mr. Coffee, Sharpie, Papermate, Expo, Elmer's, Exacto, Marmot, Abu Garcia, and more. So they have a ton of brand strength inside their company, and they are currently trading at a 12.2 price to earnings, so the valuation is very attractive for them, and they have about a 3% dividend yield right now. The reason why they are trading at such an attractive valuation is because they have about $10 billion in debt, and so that is definitely concerning for me, and that's something that I am monitoring with the company. However, they talked about how they are working on paying off their debt and how they are currently at about a 4 times leverage ratio, and they want to get that down to 3 times by the end of 2018 or 2019, and they think that they are on track to do that. And so it is definitely one of their main priorities to reduce their debt. So that is good, and I agree with management on that. And so I think that since they have all of the strong brands and they're trading at an attractive valuation, they will be a good pick long term, because you can hold them in the short term and they might struggle a bit because they're down about 50% year to date, and so you don't really know where it's going to bottom or what it's going to do necessarily. But since it's valued attractively and they have quite a few strong brands that people use every day, I think that in the long term, after they pay down their debt and continue to grow, they'll definitely be a very attractive company. So then the second stock that I think is attractive to buy in February of 2018 is Realty Income. The symbol for them is O. And they are a safe, well-managed triple net lease REIT with a market cap of about $15 billion. And they are a retail REIT for the most part, but I think that they're a lot safer because they focus on service-oriented or discount stores that are relatively safe from Amazon. Due to their good management and strong past history, they have strong credit ratings, which means they have a low weighted average cost of capital, which is very important for REITs since they finance a lot of their new building purchases with either selling equity or taking on debt, because they need to pay out about 90% of their income in dividends so that they maintain their REIT status. So they do need to finance a lot of their growth through releasing shares or taking on debt, and so having a low weighted average cost of capital is very important. This then means that they can either make more money or they can focus on lower cap rate, safer investments, and so both of those are good things. And so currently Realty Income has about a 5% dividend yield when they're trading at the $52 to $53 per share range. And they pay their dividend out monthly, which is nice. And they've raised their dividend for 81 consecutive quarters, which means that they're very committed to continuing to raise their dividend and paying it out every single month. And then their occupancy is strong. Their occupancy has never been below 96%, and it is currently around 98.3%, which speaks to how well management is running the company. So in general, I think that it is a good company that is down recently because of an overfear due to the changing retail environment as well as rising rates. I think they'll be fine in both situations. Most of their debt is fixed rate, and so I think they'll be fine with rising rates. And then I also think that since most of their businesses that they rent to are service-based or discount stores, they won't have any problem with Amazon, so I think that makes them a very attractive company long term. So those are actually the only 2 stocks that I think are attractive for me to buy right now. However, there are some stocks that I think are worth paying attention to and looking into more. I'm currently looking into them more, so I will list off some of those. I'm looking into currently CVS because they're buying Aetna and they're trading at around 16.6 times earnings, so they could potentially be attractive. And then I'm also looking at Amgen, IBM, Kimberly-Clark, and Campbell's Soup. I'll be looking into all of these in the coming weeks, and I might make videos on any of them if I think that they are attractively valued or if I end up buying any of them. But those were the 2 stocks that I am buying in February of 2018. I would love to know what stocks you guys are buying right now or what stocks you guys are looking into right now. Thank you very much for watching. If you enjoyed this video, leave a like down below and consider subscribing.